Hey there, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and the Tulsa markets. It is the 29th of July right now, and as we all know, the war is still unconcluded. We don't know exactly what's going to happen with it. We don't know if it's going to end soon or if it's going to end in 6 months. It's hard to say, but at a certain point, the market is just this topsy-turvy nature of we have a peace agreement, we don't have a peace agreement, we have a peace agreement, we don't have a peace agreement, has started to really discount it and just say, look, let's just look at the market fundamentals right now and let's just go with economic data. So fortunately, inflation is not ramping up as badly as we thought it would be. Now, mostly that has to do with oil prices. So, as you know, oil prices really spiked up early on in this war. It was over $100 a barrel, I think even 120 at some point. Right now, it's even been below $70 a barrel in the last couple of days, about $70, $71 a barrel. That's a great price, okay? That's a wonderful price where oil producers can still have the incentives to produce as much energy as possible, but then you're not going to pay a whole lot at the pump. Now, we all know that what the gas stations do. They go up fast, they go down slow. But from an economic data point, that is extremely important. Now, the second thing is tracing the 10-year Treasury. And this is very, very important as an indicator for mortgage rates. You've heard me talk about this so much. But, you know, we got to finance the debt. And there's a lot of debt that the United States has, as you know. But the good news about current Treasuries is they're really floating more in terms of quantity of the 1 year and say the 2 year or even the 5 year Treasury note as versus the 10 year. And so what's happening with the 10 year, it stays pretty stable, roughly a little bit about 4.3%, a little bit above that. I think it's about 4.34% the last time I checked. And that's really good as versus when it was spiking for 4.7%. So the good news about this is it allows interest rates on mortgages to stay at a reasonable level. We want it lower. Obviously, it makes a difference for all our investors in cash flow. But the good news is this still gives our prime builders, our big single-family builders, the ability to buy this mortgage down. And so what we're thinking we're going to see is back to that 5.125% fixed overall rate, 30-year fixed, that is going to really help you in terms of strong positive cash flow. The other thing is we have quite a few duplexes still to sell that we don't have sold that can close before the end of the year. Somewhere over about 40 of these $410,000 duplexes. And they're fantastic duplexes. I saw a duplex in Oklahoma City that was $5,000 more. That was 100 square foot smaller than ours, did not have the sprinkler system, did not have the tankless hot water systems, did not have the full guttering, and most importantly, had no garages. Two-car garages that ours have. I estimated this, and we're looking, if that $415,000 duplex had everything we have at 410, they would have to spend somewhere and up their price $40,000 to $50,000. That is why we've been getting appraisals like $437,000 like clockwork. So we have builders that are really doing fantastic prices on single families. We have a duplex that has not gone up this whole year where everybody else has gone up. So, and we have interest rates that are settling and people paying more attention to fundamentals than politics at this point. So if you're an investor, we have some outstanding deals. We have low interest rates. We have some fantastically produced or priced properties. So get a hold of us. This is a good time to put cash assets into solid fundamental assets like real estate. So at the end of this email, when you look at the description, there is an email address that you can correct a Zoom meeting or more information from us. We hope to hear from you soon.